Welcome to the 5-Minute Prime Podcast. Quick, actionable tips to master personal finance and real estate investing. In just 5 minutes a day, we'll help you build wealth and achieve financial freedom. Hey everyone, and welcome back to the 5-Minute Prime Podcast. I'm your host, Martin Maxwell. Today we're going to be economic detectives digging into a key indicator of the real estate market's health: housing starts. Now that might sound dry, but trust me, this is critical information for anyone interested in buying, selling, or investing in property. We've talked before on this podcast about the importance of understanding market trends as part of R for research and how affordability is a major factor shaping those trends. Today, we're connecting those dots. So what are housing starts exactly? Why do they matter? And what we learned about the January 2025 numbers telling us. Let's get to it. Okay, let's start with the basics. Housing starts is a term you'll hear a lot in economic news, but what does it actually mean? Simply put, a housing start is when construction begins on a new home. It's literally when they break ground and start building. It's a key economic indicator because it reflects builder confidence. Are builders optimistic about the future? Are they willing to invest in new projects? If starts are up, that generally signals confidence. If they're down, it suggests builders are worried. Secondly, think future supply. Today's starts become tomorrow's housing inventory. More starts eventually mean more homes for sale, which can help ease price pressures. Fewer starts mean the existing shortage gets worse. Lastly, consumer demand in a forecast and indirectly fashion. Builders don't build homes they don't think they can sell. So starts are a reflection of anticipated demand, even if current demand is weak. Think of it like this. If a restaurant suddenly starts ordering way less food from its suppliers, that's a pretty good sign that fewer people are eating there, right? Housing starts are similar. They're a leading indicator of the health of the housing market. Now, a common question I get is, why should I care about new construction if I'm interested in buying an existing home? Great question. The answer is that new construction and existing home sales are interconnected. A shortage of new homes puts upward pressure on the prices of all homes. It's like a ripple effect. So with that understanding, let's look at the January 2025 numbers. The Census Bureau released its report on February 18th, 2025, and the headline was a shocker. Housing starts plummeted by 9.8% in January compared to December. That's a much bigger drop than most economists were predicting. We're talking about a seasonally adjusted annual rate of 1.366 million units. But here's what's really important. It's the breakdown between single-family and multifamily starts. Single-family starts, the houses most people want to buy, dropped by 8.3% down to 993,000 units. That's the lowest level since May of 2024. And compared to January of last year, total housing starts are down slightly, 0.7%. Now, you might be thinking, okay, but what about building permits? Aren't those a better indicator of future construction? Permits are authorization to start the building process. Well, permits were essentially flat. Another important number to consider are the completion rates. Completions, the number of homes actually finished, were up 7.6% to 1.651 million. That tells us builders are working through their backlog of projects that were already started, but they're not breaking ground on nearly as many new ones, specifically new single-family homes. Okay, I know these numbers are probably not registering with you, so what's the takeaway here? Overall construction is slowing down, especially in the crucial single-family sector. But why? What's driving this slowdown, and what does it mean for you? The slowdown isn't a mystery. It's a combination of factors, all making it harder and more expensive to build and buy homes. We're in a bit of a perfect storm. Firstly, the mortgage rates. These are still a major hurdle. While they've come down from their 2023 peaks, they're still hovering around 6.8% to 7.08% in early 2025. That's more than double the rates we saw in 2021. And, as we discussed in the previous episode, the credit score blueprint, higher rates dramatically reduce your buying power. And there's the home prices. Despite the higher rates, home prices haven't crashed. The median price of a new home in December 2024 was $427,000. That's up 30% since 2020. And overall, prices are still rising, though more slowly. What about builder sentiment? Builders are feeling the squeeze. The NAHB Wells Fargo Housing Market Index, HMI, which measures builder confidence, is low. Builders are citing high interest rates and tariffs. The tariff is a huge threat lurking. This is a potentially huge factor. Increased tariffs on building materials, all lumber, steel, appliances, are adding significantly to construction costs. The National Association of Home Builders, NAHB, estimates that these tariffs could add billions to the annual cost of building materials. Lastly, the lock-in effect. And as we discussed in the last episode on affordability, this is a major contributor to the low inventory. Homeowners who locked in those incredibly low mortgage rates, 3% or even lower, a few years ago, are very reluctant to sell and move because they'd be facing much higher rates on their next home. This is keeping a large number of existing homes off the market, further constricting supply and putting upward pressure on prices. So, you've got this confluence of factors: high rates, high prices, pessimistic builders, tariffs, and the lock-in effect, all contributing to a stagnant and in many ways worsening affordability crisis. Let's look at how this stagnation impacts different groups. To the buyers, it's a tough market. Homes are expensive, mortgage rates are high, and there's not a lot to choose from. Many potential buyers, especially first-timers, are priced out. To the builders, they're caught between rising costs and weakening demand. Many are hesitant to start new single-family projects, focusing instead on completing existing projects or shifting to multifamily construction. And to the renters, you might think renters would benefit from a slowdown in home buying, but it's a mixed bag. More multifamily units are being built, which could increase rental options. But with so many people priced out of buying, overall demand for rentals remains strong, which can keep rents high. Now, we painted a bleak picture, and now you're probably asking, so is there any light at the end of the tunnel? What's the outlook for the rest of 2025? The general consensus is that we're looking at a year of stagnation in the housing market, not a dramatic crash. Most experts predict that home prices will continue to rise, but at a much slower pace. Interest rates are expected to remain relatively high, and the inventory shortage isn't going to be resolved anytime soon. And all of this ties directly back to the affordability challenges we discussed in detail back in previous episode on housing affordability. All right, let's wrap this up. By now, you have learned what housing start means, along with the January 2025 housing starts data. It confirmed what many of us suspected. The housing market is facing some serious headwinds. High costs, weak demand, and the lingering effects of the lock-in effect are all contributing to a slowdown in construction. And as we learned from previous episodes, that affordability crunch impacts everyone: buyers, sellers, renters, and the overall economy. It's a complex issue with no easy solutions. We will definitely keep an eye out for any new updates throughout 2025, so subscribe to get notifications when we publish updates on this podcast. Now, your challenge today, I want you to do two things. First, revisit our last episode. What the heck is affordability in the housing market? Refresh your understanding of the core affordability issues. Second, take a look at the housing starts data for your local market. Are builders pulling back? Are permits down? What does that tell you about the supply and demand dynamics in your area? Start connecting the national trends to your local reality. And as always, if you found this episode helpful, please subscribe to the 5-Minute Prime podcast, share it with a friend, and leave us a review. I'm Martin Maxwell, reminding you that even in a stagnant market, knowledge is power. Until next time, keep learning, keep growing, and keep building your future.